Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on Indian hotels. Our analyst maintains a buy on Indian hotels with a price target of Rs 450 over the next 12 months. Indian hotel registered mixed performance in Q1 with revenues growing by 16% while EBITDA margin declined by 187 bps to 28%. The company expects strong room demand to sustain in the coming quarters with events such as G20 Summit, Cricket World Cup and return of foreign tourist arrival will drive high room demand and achieve higher average room rentals during event period. With room demand expected to be ahead of room supply, the company is expected to report strong performance in the medium term. Indian hotels growth would also be driven by aggressive room addition strategy and asset-light model. Thus, we maintain Indian hotel as one of our top picks in the hospitality space. The stock is available at an attractive valuation of 21.4 times FY24 earnings and 18 times its FY25 earnings EV by EBITDA. Next on radar is Mahindra Lifespace Developers. Our analyst retains a buy rating on stock with a revised price target of Rs 580, increasing the NAV premium to factor in strong scalability in business over the next 5 years, well supported by realty upcycle. Mahindra Lifespace reported healthy sales booking driven by sustenance sales in Q1 of FY24. Industrial leasing remained weak due to its lumpiness nature. Lower revenue booking widened operating and net losses. The management has set aspirational sales booking target of Rs 8,000 to 10,000 crore by FY28. Its launch pipeline for FY24 remained intact with Q3 expected to be high on sales booking. The business development pipeline would be scaled up from current Rs 5,500 crore to Rs 40,000 to 50,000 crore to achieve targeted sales booking of FY28. Last, we cover Birlasoft. Analyst maintains buy on Birlasoft with a revised price target of Rs 470 as the company delivered a strong quarter in a challenging environment, beating estimates on revenue, margin and profitability front. Revenue in constant currency grew by 2.7% quarter-on-quarter, beating our estimates of 0.9% quarter-on-quarter, driven by decent growth across manufacturing and BFSI verticals. EBITDA margin expanded 168 bps quarter-on-quarter to 15.3%. Management is optimistic about exiting FY24 with 16% EBITDA margin. Net profit stood at Rs 137.5 crore, which was up by 22.6% quarter-on-quarter, beating our estimates of Rs 120.3 crore. The company signed TCV deals of $146 million, out of which new deals win TCV stood at $80 million, which was down by 29% year-on-year and 30% quarter-on-quarter. Attrition moderated sharply while utilization improved marginally during the quarter. With the turnaround on track for Birlasoft, we expect strong 10.5% sales and 43% PAT CAGR respectively over FY23 to FY25 estimated earnings. At the current market price, the stock trades at 19.4 times FY24 EPS and 16.5 times FY25 estimated EPS. For more detailed disclosures and disclaimers, please refer to our research report or contact our nearest branch. Please read the risk disclosure document issued by SEBI and relevant exchanges and terms and conditions on sharekhan.com before investing.
Thank you for watching. To keep up with the latest from Sharekhan, make sure you subscribe to our channel. You can also download the Sharekhan app for all your trading and investing needs. Investment in securities market are subject to market risks. Read all the related documents carefully before investing.